Happy Monday, May 11th. Welcome to another exciting edition of Rate Desk. I am your host, Michael Thomas, here to talk about multifamily interest rates, among other news. Let's first go into the markets. We've got the S&P 500 up on a 3-day win streak at the close of business today. We've got the NASDAQ also on a winning streak, 6 days at the close of business today. The Dow is down on a 3-day down streak. So a bit of a mixed message there. We've seen that before in this market. Jumping into other news on the crude oil in the $24 range, mid $24 range, kind of similar to where we were tracking last week. U.S. 10-year Treasury yields, important to those long-term fixed rate lenders. Those are up. They're back into the 70s. So we're seeing them between the 71 to 72 basis point range today. Let's say they closed around 72 basis points today. We are still seeing strong low pricing on the FHA fixed 223F. That is still pricing today at 250. That is 250. And on the 221D4 new construction, still pricing at 315. That is 3.15 fixed for 40 years. Jumping over to the agency desk, we are seeing them range bound relative to last week. I would say that the Fannie Mae DUS pricing, we were quoting 315, maybe it's up to 319 again. Very waiver dependent, very LTV dependent there, but somewhere within that range. Freddie Mac still within that 320 to call it 335 range. And I want to quote you a small balance rate today. Maybe I'll start quoting more of those. Fannie Mae has a small balance loan program that's loans under $6 million. The benefit to the borrower is that the transaction costs are lower. The rates aren't better necessarily. And in this case, on a 10-year Fannie Mae small balance loan under $6 million, your rate would be 369. That is on a 10-year fixed rate with 10 years of yield maintenance. And as you know, yield maintenance is the most restrictive form of prepayment, other than just a plain old lockout where you just can't refinance your note at all. So that's a new quote for you, something to think about for those smaller properties you may own in your portfolio. Now, in other news, what I want to talk about today on the HUD FHA appraisers and market analysts, they've been asked to provide these COVID-19 related impact updates. Well, they're doing a lot of them, as you can imagine. I've heard from one of our underwriters today that the price range is in the $1,000 range. Not too bad when you consider, a full new report, whether it's an appraisal or a market study for HUD, could cost you $8,000 or more. They will do these specific updates for about $1,000. That was good to hear. Another trend I'm seeing today, and I've talked about it before, but virtual conferences and webinars, we are living those today. Novoco, big company, does a lot of national conferences, does a terrific job. Just moved their new market tax credit conference virtual as of July. That's right, July 23rd. They're going to have their new markets tax credit conference online. Hey, here's an idea, okay? Now, the new markets isn't something that I would spend the time or money to go to, as I'm more focused on low-income housing tax credit conferences and things that pertain to multifamily housing. However, since now it's virtual, the price has dropped, I might just attend it. Maybe this is a time when we can focus on regions or other areas that may be of interest, but we can never justify the cost-time benefit. Well, now that things are virtual, it really does open up a brand new universe, really, of information that we can access that's more affordable and timely. Ballard Sparh, another company that puts on conferences, again, announcing a bunch of webinars coming out. Colorado Housing Finance Authority, CHFA, they have 2 upcoming webinars, one on enterprise green communities and their 2020 new update to their green enterprise rules for multifamily developments to become energy efficient. So again, seeing this trend nationally, virtual webinars, clearly with Novoco, they're pushing out to July. They made that call early. I think that was a good call for them to do that. And that's something that I'll check out. So food for thought today is think about learning and gathering information in areas that you have interest and maybe even some things you might be working on but never really had the time or could justify the expenses because it wasn't your primary focus or your primary business. That is my food for thought today. This has been another episode of Rate Desk. I'm your host, Michael Thomas, signing off.